Good evening, everyone. I welcome you all for today's webinar on the topic Textile Pulse, reflecting on 2023 and anticipating 2024. Today's webinar is brought to you by Wazir Advisors in partnership with the Textile Magazine. By default, the mic and webcam of all the people attending would be on mute. But if you have any specific question, please use the chat window, mention your name, organization, and the question you would like to post. And we would try our best to get back to these questions at the end of the webinar. Else, we would share these questions with Wazir Advisors, and they're going to get in touch with you directly after the webinar. Without further ado, I would like to welcome our speaker for today's session, Mr. Varun Vaid. He's the business director at Wazir Advisors. Varun leads the textile and apparel sector strategy division at Wazir Advisors, boasting over 22 years of experience with a background in textile engineering and an MBA. As a seasoned consultant, he is spearheading successful projects globally, working with many textile conglomerates, government agencies, and development organizations across various countries like Bangladesh, Kenya, Ethiopia, and Vietnam. Varun's expertise spans various facets of the textile sector, emphasizing sustainable growth. Attendees of today's webinar can expect valuable insights from his extensive experience and deep understanding of our beloved textile industry. Hello, Varun. The mic is yours.
Thank you, Ganesh, for the introduction, and I welcome everyone who has joined the webinar. Thank you so much for your time. So, without further delay, what I'll do is I'll just straight away go into the presentation for today. I'll just share my screen. Before we begin the discussion, I'll just like to have a brief introduction about the organization that I represent, Wazir Advisors. So we were established in 2008, almost 15 years in operations now, and we have been working with the industry in the textile and apparel sector specifically in projects related to strategy, operations excellence, alliances, and skill development project. And today we have a strong team of almost 65 plus consultants with diverse educational and academic, educational and professional background. And we have not only delivered projects in India, but also in other key countries, the countries wherever the textile and apparel industry is concentrated, we have delivered projects. Whether in Asia, we talk about Bangladesh, China, Vietnam, or in Africa, Ethiopia, Kenya, even to the extent of Lesotho and Central America, Europe. So we have done projects over there as well. So with that background, I'll after this, I'll just straight away go into the presentation, which is the theme. What is the what has happened in 23 and what can be expected in 2024. So I'll begin with the global sector overview. And the first and foremost is talking about the global apparel consumption. So if you look at the apparel market, global apparel market of in 2023, the consumption was almost $1.7 trillion in the last year. And the biggest market were the countries of USA and EU. These combined together have a market share of almost 1/3 of the total consumption. Then this is followed by countries like China and Japan and even India. So these are the top five countries where the apparel consumption is happening. In terms of the year-on-year change, what we are seeing is that most of the countries have grown to the extent of 4, 6, 7% over the last year. India, 10% increase was there, but there was a decline in the market of China as well as Japan. This was not in real terms, but because of currency fluctuation, in dollar terms, their market declined, but in the local currency terms, the market actually expanded. All in all, what has happened is that the market has actually increased to an extent of 3% over the last year. And what is projected is that this 1.7 trillion has the potential to become 2.3 trillion by 2030, which will be a CAGR of, which will be an annualized growth rate of 4%. Moving on from the consumption to the global trade. This year, again, the global trade increased, but to a very minimal level of 3% only. The last year's trade was $910 billion, and in 2023, it is estimated that it is around $937 billion. And it has been growing at a CAGR of 3% over the last 12-13 years. And the projections are that this trade itself, the global cross-border trade, will increase to 1.2 trillion by 2030 in the next 7 years. If we look at the breakup of this $937 billion of trade in 2023, what we see is that China is the biggest supplier, China is the biggest exporter of textile and apparel goods with a share of 31%. A few years back, or I would say about 5 to 6 years back, this share was on a higher end. It was in the range of 38 to 40%. It has slowly been declining, while the absolute dollar terms trade of China has always increased, but the share has been declining. It is now at 31%. And the countries which have grown are the other Asian countries, Bangladesh, which is almost touching $50 billion worth of exports, followed by Vietnam. In Asia, I'm talking about that's almost $40 billion worth of exports, and just below that is India, which is $37 billion with a share of 4%. Last year typically was not very great for Indian exports, and while the other countries of Bangladesh and Vietnam could increase their trade faster at the expense of the share which was going down by China was taken up by Bangladesh and Vietnam, but India's exports were actually not that great in the last year. If we look from the import side of it, that was the export. If you look at the import side, there was quite a significant decline in apparel imports of all the key geographies. If you look at the first 11-month data of 2023 vis-a-vis 2022, what we see is that USA's import declined from $93 billion to $73 billion. That's a mammoth 21% decline in the overall imports of the country. Then EU imports also declined by 13%. UK declined by 17%. So Japan also declined by 4%. So all in all, there was a decline in major key markets, which also resulted in a lot of restructuring across the exporting countries. Looking at the apparel consumption, or let's say the retail level consumption, specifically in the US market, what we are realizing is that the US apparel store sales in 2023 were 6% higher than in 2022. So on one hand, what is happening is that the imports declined, but the apparel store sales increased. I'll come to that reason behind that. While the US home furnishing store sales declined by 6%, and the e-commerce sale also registered a very, very nominal growth rate of 2%. So as I was mentioning that the imports declined, but the store sales increased. So there were two reasons for that. One reason was that the inflation remained higher, and the other was the destocking trend of retailers. So retailers' inventory, which was piled up for last many quarters, they were also destocking that, offering that on discounts, and selling that only instead of ordering fresh merchandise. That also had an impact on the total imports of the region. One very important thing was on the consumer index. So why US market is so important, that it is the single largest market in the world, and a lot of the, I would say, the value chain beginning starts from the demand of US. So if US demand is high, so that has an impact on the entire global textile and apparel value chain. So US is quite important in that context. And what we realize is that the US consumer confidence index also remained at lower level throughout the last year. In 2023, if you look at the green thick line, what we realize is that while it was a little bit higher than 2022, but compared to 2021, it is still low. The only thing is that in last few months, I would say the last quarter only, it has crossed the 2022 level. So there might be an uptick from here onward, but the last year clearly showed that the consumer was not keen on buying. And this is not only for apparel, but in general, the expenditure was not on the top of the mind of the consumer. So at the global level, what key happenings in 2023, there were four major actions which took place. One was the limited market expansion amidst volume challenges that I just explained, that the market increased at minimal level 2%, 6%. Retail level consumption increased, but that was mainly because of elevated inflation and retailers continuing the trend of destock, while the imports were not increasing. So that on one hand, the trade was not increasing, but the sales was increasing. The second important thing which happened is that Bangladesh and Vietnam sustained the momentum in acquiring China's market share. Whatever China's share is declining to the extent of 1%, 0.5%, 2% per annum, that is mainly being taken up by Bangladesh and Vietnam. So this is the reason is there are twofold reasons to it. It is the geopolitical factors as well as the escalating manufacturing costs. The third thing, important thing in the global textile industry was uh, the stabilization of raw material prices after a very high growth in 2022. We all know that in 2022, all the raw material costs were touching sky. There was a sudden surge in everything. But in 2023, if we look at the average prices of cotton, polyester staple fiber, or nylon filament yarn, all declined to an extent of 26%, 11%, 10% respectively. So they were kind of stabilized in this year. The fourth very important thing which came into picture was that the sustainability theme maintained prominence in the textile and apparel industry. Uh, the integration of sustainable practices was because of the initiatives of leading brands and anticipation of imminent guiding policies as well by the policymakers. So those are the two drivers which are causing the manufacturing industry to bring on a collective commitment towards the environmental responsibility and ethical standards in the industry. So this was what happened in 2023, but what to expect in 2024. So the four themes that we can expect in 2024 at the global level is first and foremost is kind of good news for the entire industry is that there is a likelihood that the inflation would reduce in the coming months, and this could lead to a rate cut in US, in Europe, and in other larger economies, which will pave the way for potential resurgence of consumer demand. This will be led by economic recovery, and if this rate cut happens and this inflationary pressure is reduced, then the overall textile manufacturing as well as trade could expect a demand revival. The second thing which we can expect in 2024 is continued decline in Chinese trade share. 2023 was one of the rarest year where China had a net negative FDI. And I'm talking not only of the textile, but in general. So what is happening is that this will lead to a further reduction in trade share in the coming years also. And the ongoing trend of shifting investments to countries like Bangladesh, Vietnam, and even India to a certain extent is poised to persist, fostering export growth in these nations. The third, which is a kind of a red flag, is it could be the impact of geopolitical tensions, which could impact or which could delay the industry revival. The resolution of Ukraine and Russia war, which is going on for many quarters now, is still not certain yet. So that is a kind of a instability in the overall geography and the economy of specifically the European countries. And additionally, there has been recent issues with the Yemeni rebel attacks on freighters in the Red Sea. And there are certain talks which have happened in last couple of months about the potential tension between China and Taiwan. So if these two things apart, in addition to the Russian-Ukraine war, these are the potential highly risky items that could impede the industry's revival. The fourth thing which we have to look out for, not only for 2024, but beyond 2024 as well, is the growing AI influence in the textile sector. AI is already being incorporated in textile industries in areas like enhanced eco designs, color matching, quality control, and inventory management. With positive outcomes, the AI's involvement is expected to grow significantly, reshaping various facets of the industry. And this could also mean a threat on the low-end jobs as well as at the other spectrum of the job and it on the creative jobs. So that is a threat which is looming on the overall industry. And how do we adopt it? How do we become efficient is something that will be figured in the years to come. With that, I would like to move to the Indian sector overview. In the domestic market as well as export is projected to be $175 billion in the ongoing financial year 2023 and 24. And this is I would say, a modest growth rate of 6% year on year from 2010-11. The targets of Ministry of Textiles to increase this market, I would say double the market size by 2030-31, would actually require a very high acceleration growth of 10%. So for last 10-15 years, we have been growing in the average rate of 6%. But if we are to meet that target of $350 billion set by the government or Ministry of Textiles, so the required growth rate would be much higher at a 10% CAGR. This would mean a lot of additional investments, a lot of productivity improvement, a lot of venturing into new products and capacity addition. If you look at the breakup of this $175 billion, which is the 2023-24 market size, so we see that almost 80%, 79 to 80% of that is the domestic consumption, while the rest 21% is the exports. India is one of the unique, I would say, countries in the world which has a much higher domestic market than exports. So China is another country which is in the same region. Their domestic market is very high, but again, exports are much higher. But in India, it is the other way around. So 80% share is domestic markets and only 20% is exports. So that's a kind of a unique structure for India, and that is also an attractive thing for many of the international brands and even international manufacturers to venture into the country. If you look at specifically at the imports, we all know there have been a lot of discussions going on the social media, on the professional groups, etc., that the Indian imports are growing at a breakneck speed. From the 2019-20 COVID year to 2022-23, we have actually seen a quite steady increase in the imports, and specifically on the apparel side. So we were nowhere, almost like $1.1 billion in apparel imports, which in 4 years' time almost was touching a $2 billion kind of an import mark. This year, 23-2024, there has been a kind of a 10% decline in the imports, mainly on account of reduction of imports of the staple fibers of various types and almost a $200 million decline in the apparel market. But otherwise, from a long-term perspective, our imports are increasing at a higher rate than the exports. And going forward, again, this is expected to increase further. And we're expecting that by 2030-31, this import level could even touch $16 billion, out of which we'll be focusing to at least having a $2.5 billion imports of the apparel segment. Moving on to the fiber scenario, staple fiber scenario in India, again, not a very bright picture here. Our total production has almost stagnated in the last 3-4 years. It has not increased. It's almost at the threshold of 9.7 million kg, 9.7 billion kg, I'm sorry. The exports have also declined, while the imports have actually increased. So let's say the exports, if we talk about declining, is not a red flag until we are able to do value addition and enhance our exports in the downstream industry, let's say of the yarn, fabrics, and garments. But unfortunately, that has also not happened. So that's a kind of a concern for the entire export community. While on the other hand, imports are increasing. Imports are including even cotton for that matter, and some of the specialized staple fibers which are not available in India, or let's say not available in India at the right quality or the right price. The yarn production, again, almost the same scenario. Our production has declined marginally in last 4 years. And the export in value terms has also been stagnant. Almost $4.8 billion worth of yarn is going out of the country. So that has also stagnated, while the imports have increased almost double in 4 years. So that's the scenario of Indian yarn industry. Fabric industry has shown a little bit better growth, nothing to boast about, but better than, I would say, the yarn or fiber scenario. If you look at the woven exports, the growth has been nominal, only 1% CAGR in last 4 years, while the imports have also increased a little bit for $100 million. Knitted somewhere, the CAGR looks very high in double-digit growth rate, 11%, but the base is quite small, not even $1 billion what is we are exporting, while the global market is quite big. And the other unfortunate part is that the knitted fabric imports in value terms are actually higher than the knitting fabric exports from the country. So this is a big concern for the value chain. We also publish one report every quarter, which we call as Wazir Textile Index. I'm sure many of the participants here would be receiving that or would be seeing it on our LinkedIn pages, etc. So in this index, what we do is we map the financial health of top 10 listed companies in India and see how they have moved as from a base year of FY16, taking as 100. So the latest financials, which are available for the first half of the ongoing financial year are also not very encouraging. What we are seeing here is that on sales level, there was a 5% dip, while on the EBITDA level, the profitability level on a combined cumulative basis, there was a 30% decline. From 108, the index went to 76. So that's a big concern. If you look from a long-term perspective, from 100 in FY16, the sales have grown by 60%, but the profitability has actually declined by 24% in last 8 years. So that is again indicator of not a very good scenario of the industry. The only good year was FY 2022, where there was a sudden surge in the demand after after the COVID period, and the profitability actually increased far better than even the sales also. Coming to the last section, what happened in 2023 in India, there were four major, I would say, activities that we could summarize for this year. One is the low capacity utilization across the value chain. You've already seen that the global demand was also subdued, as well as the domestic market also did not have a very good growth rate. So because of the demand, the utilization rates across the value chain, from yarns to fabrics to garment manufacturing, everything was quite low. The the impact was actually more prominent for standalone and smaller businesses. This is actually a very important thing for us to understand here, is that there is a trend of consolidation which is happening not only at the buyer base. Buyers are looking to buy from fewer companies, but that is also a trend which we are witnessing in the industry, that the smaller and standalone players are not able to compete effectively against the larger and vertical ones. So the medium ones are also struggling. So it is only if we do a kind of a comparative analysis of the performance, so the larger ones are a tad better. I would not say very healthy or doing very great, but in comparison, the larger ones are doing on a better scale. The second thing was the subdued garment exports, which impacted the industry growth. So we all know that garment export is the engine of growth for the textile industry. Unfortunately, there was no growth this year in the calendar year. We ended the calendar year 2023 below the $15 billion mark, which is just quite low. At one point in time we were hovering in the range of $17.5 billion. So that was a decline. This is in stark contrast to the export growth witnessed in countries like Bangladesh and Vietnam, which are hovering around $40 billion, $50 billion mark. So this underscores the industry's struggle to actually achieve optimal export performance in the global context. The third thing, what I would like to mention here, is that there were several central government initiatives aimed at industry revitalization which were introduced. One was the extension of PLI scheme, which is exclusively for the synthetic textiles and technical textiles. And the government also declared the locations of 7 PM Mega Integrated Textile Region and Apparel Parks. These are the parks which are stipulated to act as the center of future growth. So these were declared. And the Samarth scheme, which is the training scheme, was also expanded. So these were the three good initiatives, we would say, that were taken by the central government to revive the industry. That is there. Fourth thing, which is, I would say, a green shoot for the Indian industry specifically, is that in last few months, we actually saw declaration of few of the large multi-billion-dollar garment manufacturers to invest in India. So these were like Epic, Grupo Inditex, CL Textile Group. So all these players actually declared substantial investments in India in the garment manufacturing. So while the first to say that the utilization was not good in the last year, the exports were not great either. But what has happened is that these investments which are declared in the country, they actually reflect a robust vote of confidence in the long-term potential of India's garment manufacturing sector by the global buyers as well as the global investors. So those were the key happenings in 2023, but what to expect in 2024 in the industry. So again, four things here is, first and foremost, is a positive thing or let's say all four are positive. One is first is the buyers trust to drive investment. So we ourselves have been talking to several buyers over last 2-3 quarters, and what they are saying is that it is written on the wall that the share from China has to come down. So they are always looking for some other options. And for in last few years, the share has mostly gone to Bangladesh and Vietnam. But there is a strong recognition of India's raw material strength and robust manpower pool, along with the domestic market, which is large and growing, and also gives a cushion from the global shocks. So, brands themselves are encouraging their value chain partners, the larger vendors, to explore either entering India or expansion opportunities in India in across the value chain. So, the 2-3 examples that I just shared in previous slide, though declared, they were also being brought in by their buyers, and we are aware that there are several discussions going on. There are several large companies which are evaluating investing in India on the thrust given by their buyers that why don't you invest in India? And we are also looking India as a retail market. So initially it could be export oriented, but 5 years, 10 years down the line, the setup which is going to come up in India by the international investor would cater to their local retail demand. The second thing is, again, it's an anticipation, fingers crossed. Again, here there is a discussion which is going for 1.5 years now, is the anticipated FTA with UK. There is a negotiation which has just started with Russia-led five-member Eurasian Economic Union, which is going to start here. And another FTA between India and Oman is on the horizon and is likely to be signed in 2024. So these are in increasing, I would say, decreasing order of importance. So UK is one of the bigger markets for us. It's an important market. It is a market that our industry understands. We're already doing almost like $1.5 billion worth of apparel exports on an annual basis. So if FTA is signed with UK, that will definitely be give a fillip to the Indian apparel exports. Maybe it could be double on an immediate basis. So that's there. The second, Eurasian Economic Union will give us access to Russia and the other neighboring countries. While Oman is a smaller market, but again, from a Middle East perspective, it's still a significant player, maybe not in apparel, but in other segments as well. The third thing, what we are realizing when we are talking to several of the large progressive players, is the rapid adoption of digitalization. We know that the manufacturing cost are rising and will continue to rise. There's no second thought on that. So leveraging digital tools is the best, I would say, and is the need of the hour to boost efficiency and maintain competitiveness. And this coupled with the fact that there are new age and cost-effective digital solutions which are now available to the industry. So we are expecting that there will be a widespread adoption across the country of these digital tools. The fourth, and I would say one of the very important thing is that there will be an increased action towards sustainability. One is that, as we have mentioned earlier in the global part, is that the buyers are pushing for it. The policymakers like European Commission, they are pushing for special policies to be made for sustainability. So that will impact our industry as well. Uh, we have already seen that there's a lot of talk and action which is being there in the industry forums, and some of the, I would say, leading companies have already adopted the sustainability theme in their manufacturing and process aspects. And this is something that we expect to continue at a heightened pace in 2024. And this will have a large impact on the entire ESG issues which are there, and how do we address it. This is going to be there. And while we're talking on the matter of sustainability, one more thing which is important is the circular economy, or let's say the recycling domain, which is there. So this is something which is also going to be an important thing, I would say, thing to watch out. This domain, there is a lot of discussion and action which has happened in the last year, and we expect that will also continue this year and henceforth. With this, I would like to conclude my presentation over here. And I think there are certain questions and answers in the chat box. Uh, Ganesh, how would we like to proceed?
Uh, Whichever questions you're comfortable taking, Varun, you could take
Yeah,
up
sure.
those questions, and then you could probably respond to the attendees what your solution would be for those
Sure.
questions. And
Sure.
then after a few questions, so we could just wrap up the webinar as and
Sure.
when you're comfortable.
Thank you. Thank you so much. So we have actually received some of the written questions uh, in the previous to this webinar also. So I'll take a couple of them, and then there are certain questions which are typed on the chat box also. So one of the question is that why is the ranking of Germany and Italy so high? So they are actually the re-exporter as well as the distributor of a lot of apparel for the entire European nation. So that is the reason that they are high up here. So there's a lot of re-export which is happening from the country. It is mainly due to trade, not due to the manufacturing activity which is there. We know that Germany and Italy, some of the high-end garments and some of the technical textiles are getting manufactured, but not to the extent which the data is being reported. Uh, so one of the things that has been asked repeatedly, and I think this should answer some of the question, is that is China one policy really benefiting textile industry in India? And there are related questions also which are there. So I think the data that we have shown here. So the data that we have showed here clearly depicts that while the China's share might be decreasing, but it is not working to the benefit of India. It is the countries of Bangladesh, Vietnam, and even Cambodia, for that matter, who are increasing their exports to global markets at a breakneck speed. Rather, India's export declined last year. Okay, we can always say that that was an aberration, but still the shift of trade share from China to India has not happened. So that is the biggest thing. And the challenges are many. I think everybody in the industry in this webinar also are from the industry. So need not explain on a lot of issues which are there in the country. But I would say uh, one of the things that we have to look at is the size and scale. What we are putting up in the country is very, very important, right? So the PLI scheme, which was brought in to bring scale in the synthetics, was specifically to address the scale issue, that we should have larger setups which have the economies of scale, which are able to cater to larger orders of larger buyers. But unfortunately, that has not happened. That has not been the case. And I completely understand that people would say that there are challenges related to larger scale. If we talk about garmenting, there is a lot of manpower which is required. If we talk about spinning, then there are a lot of capex which is required. So those are the issues which are there in the value chain. But we should also realize that these are the challenges which are not unique to us. These are the challenges which have been solved by the entrepreneurs in countries, smaller economies like Bangladesh and Vietnam. So there is no reason for us not to solve. But anyway, so that's a lengthy discussion why it has not happened. But so far, China plus no one has not worked. Having said so, the important thing is that there is a interest of larger buyers like Uniqlo, Decathlon, Under Armour, etc., on the domestic market of the country, and them asking their vendors to evaluate India as a manufacturing destination is a proof itself that the long-term story, the long-term growth story of India is still there. 1 year is I would say it's not a small time period. Definitely, there have been cycles of recession, or let's say the cycles of lower demand in the industry, which lasted for 3 to 6 months. But this has been going on for last few quarters. So this has been long cycle. But the long term positioning of India is very clear with the buyers. They not only see India as an export destination, but also as a retail market. So that's a unique positioning, which will ultimately in next 4 5 years should fetch better results for the country. Again, there's one question which is about the what are the key trends in the global textile and apparel industry which will impact it in going future. So some of them we have talked about, but just to summarize, the first and foremost is going to be the specific thrust on sustainability by the buyers, coupled with the recycling or circular economy and traceability. So these are the, I would say, going to be the must-haves for all the industry. And beyond that, in terms of increasing competitiveness, digitalization and automation will be the key themes. China plus one will continue, while the absolute trade will still not be lower for China. It is still 31% share. it may come down to 28%, 26% share, but there are no capacities available anywhere in the world which could actually replace, at least on the textile side of it. Let's say if you're looking for having nylon, polyester, spandex, all these kind of facilities that they have developed, there are no options available anywhere else in the world. If buyer wants to move, they can move at the front end on the garment side of it, but on the textile side of it, there are not many options. The cost, the service, the competitiveness, so everything is considered in China. So China plus one will continue. That is one thing. As I mentioned about the consolidation, we are very clearly witnessing that there is going to be a trend of consolidation. On one hand, buyers will continue to focus on buying from fewer and fewer suppliers, and the smaller suppliers will also see a kind of a consolidated trend with their larger counterparts. In terms of fiber mix, a key trend is the increasing use of man-made fibers. In India specifically, our demand for man-made fibers is comparatively low, but it's an upward trend. So we expect the categories of athleisure, sportswear, activewear, or even the Western wear which is there to drive this demand of polyester into the country, and I think that is going to be a additional trend which will impact the overall industry structure. Uh, Another question I would like to take is what is the outlook for Indian home textile industry in 2024, and what are the strategies to leverage technology for enhanced marketing? So I would say home textile is one unique industry where actually we have a stronger position compared to, if I'm talking about the finished goods. So there are apparel, home textile, and technical textiles. So if we talk about home textiles, it is that the top 4 or 5 countries of India have actually established world-class facilities, and they on the size and scale side of it, they compete with even China and wherever the manufacturing is happening, China or Turkey or wherever. So that gives us a unique positioning. In some of the categories in US, we have a much higher share than China in many of the categories. So actually, it is quite competitive sector that we have built in home textiles. And if we remember correctly, just after the COVID, actually during the COVID also, the performance of home textile sector was actually still better than the dip which were seen in the other segments. So in 2024, we see that if there is a revival which is happening, so the home textile sector should definitely be I would say, better performer in the next year. Maybe we can take one or two more questions. Yeah. Okay, so there's one question that we know that the costs are increasing in India, but what is the situation in Bangladesh, Pakistan, Vietnam, etc.? So the good news is that the costs are increasing there as well. But I think so inflationary trend is everywhere. There's no doubt about the costs are increasing in Turkey, in US, in Vietnam. Everywhere the costs are increasing. The labor costs anyways are supposed to increase if the economy is doing good. The lending rates are also at the peak at this point in time. If you talk about Bangladesh, the gas cost is all-time high. So the cost increment is always there, but then they have certain advantages also. Let's say the duty-free advantage, which gives you 12% or 10% advantage on the finished goods, gets included in the costing itself. So that's the kind of an advantage that they have. Then they have a lot of manufacturing excellence, or let's say the high manufacturing efficiencies which are there in the system, which unfortunately India is not having. So that will also give us a disadvantage. Let's say if we talk in terms of apparel manufacturing or even our beloved cotton yarn industry. So we know that we are poised, we are positioned as one of the most competitive cotton yarn spinner in the world. But there was a time only a couple of years back where there was an inbound cotton imports from Vietnam. There were a lot of containers which were coming into the country because of several issues. So manufacturing excellence is one area. Apart from, I mentioned about the capacity addition, manufacturing excellence is one area which our entrepreneurs have actually not focused on too much. We have a full dedicated manufacturing excellence vertical in our organization, and the kind of achievements that we have helped people to achieve is something out of this world. So we couldn't have imagined ourselves the kind of advantage by focusing on a proper system, what it could bring into the country. Then uh, another question is, will Bangladesh, somebody said that Bangladesh and Vietnam is grabbing the share of China, but why yarn is not exported from India to these two destinations? Okay. So again, the thing is that every country has a vision to be self-reliant, right? So if we look at the statistics of last, let's say, 5 years, the spindle capacity addition, which has happened in India, it is one of the largest one recipient, but the spindle capacity in Bangladesh as well as Vietnam and even Uzbekistan has happened at a much faster pace also. So that the thought process of these countries, which are standalone garment manufacturers, is to backward integrate fully. So Bangladesh actually offers 4% incentive for using the local made spun yarn. So that's an incentive that people get to invest in the spinning sector. So I think the days are gone that we should only be focusing on export to Bangladesh or Vietnam as a kind of a growth driver for cotton yarn industry. The need is to look inwards to focus on our domestic market or to enhance our competitiveness for full package integration rather than just focusing on yarn export. So that's a big challenge which is in front of us. So this is there. Maybe we can take one or two more questions. Okay, is there a chance, any chance for improvement of spinning industry in 2024-25? I would say yes, definitely there should be a bright chance of recovery. I would say the utilizations were, I would say, at the bottom rock level in 2023 and 24. The next year, if garment consumption at the global level is expected to revive, so then definitely it will convert into the spinning industry. All said and done, we are having a lot of capacity in the country which is available. So definitely spinning industry, the utilization level should be increasing in the year, in the coming year. Can India capitalize in terms of trade over the unstable political and economic situation in textile majors like China and Bangladesh in short run? I would say that to an extent, yes. Like for example, the, let's not say unstable political and economic situation. What we can say is that definitely people are already moving from China out. That is very clear. But Bangladesh still offering them a lot of incentive, and we should not forget that they have duty-free access to Europe. So that's a big aspect of it. But going forward, the discussion is that their GSP, EBA, LDC, because they are LDC, they're graduating from LDC. So in 2029, they will stop being an LDC. Over next 3 years, that is by 2032, the discussion is that their duty advantage will be phased out. It may happen, it may not happen, because there are always discussions, always other agreements which could be planted. But right now there is a need for the international investors to look out overseas, apart from Bangladesh or from Vietnam. So India is there, and there is an evidence which is there in terms of the discussions going on. People are coming to India, they're evaluating various PM Mitra parks, various states, and states are also doing a great work by offering a lot of incentives in terms of the wage subsidy, the interest subsidy, power subsidy, etc., to some of the international investors. And we know that certain states have actually taken their delegation abroad, overseas, even to Bangladesh for that matter, to attract investment into the country. So I think, yes, there is a good chance that India would be able to attract some of the investment in the future, not in 2024, if not in 2024, but in next 4 or 5 years. Okay. Okay. Any more questions that we can take? I think, Ganesh, there are actually so many questions. It will not be possible, and some of them are actually beyond the scope of this panel also. So what we can do is we can have this on email. Maybe we can try to answer some of them on email, which we think are relevant to us, for us to answer. And rest is that this presentation that we delivered was a part of our annual textile industry, apparel industry report, which was shared earlier with many of the people. It is also available on our website and social media. But if you're not able to see, then I can also request Ganesh to share it with all. And then there's my email ID also, which is there.
Exactly. That was the question I was going to pose to you, because there were a lot of people asking if they could have the presentation after the webinar.
Yes. Oh, yes, yes, yes. So, Wazir Advisors publishes 17 reports annually, which is circulated among its industry network. So, one annual report, four quarterly report, and 12 monthly reports. So, one for 12 is what we are doing every year, circulated free of cost to all our network people. So, if your email ID is not there in our database, please just leave a message on our LinkedIn page. We'll get it added and you'll start receiving this email. But for this, whatever changes have been made for specifically for this webinar, we'll be sharing it with Ganesh and then we'll request him to share it with all the participants.
Beautiful. All right. We come to the end of a thought-provoking webinar. I thank everyone for attending today's talk session. I want to thank our speaker, Mr. Varun Vaid, and a very special thanks to Mr. Sanjay Rara and his team at Wazir Advisors, who have been working very closely with us for the last couple of days to get this webinar, to make this webinar a grand success. So we hope to see you all in the next webinar. Until then, stay tuned, stay safe. This is Ganesh Kalidasan signing off. Thank you so much. Thank you. Thank you, Varun. Thank you, Wazir. Thank you so
Thank
much. Bye.
you.
Bye. Bye.